Bitcoin crash ahead. Expert warns higher inflation could whip Bitcoin price to 30K. The warning appears against the U.S. Federal Reserve's intention to tighten its asset purchasing program rapidly following by 3 rate hikes in 2022. Bitcoin may end up falling to as low as 30,000 if the U.S. inflation data to be released on Wednesday comes any higher than forecasted, warns Alex Kruger. And that's this Wednesday coming up. That's why I wanted to read this. Founder of AK Capital, a New York-based asset management firm. The market expects the widely followed consumer price index, CPI, to rise to 7.1%. Go follow Peter Schiff on YouTube. He's the best in the business when it comes to covering the CPI and other things when it comes to the U.S. economy. He's the chief financial officer of Euro-Pacific Capital. For the year through December and 0.4% month over month, this surge highlights why the U.S. Federal Reserve officials have been rooting for a faster normalization of their monetary policy than anticipated earlier. So you break down the CPI, broad gains in key categories contributed to spike in annual headline U.S. inflation. The CPI year-over-year NSA, goods excluding food and energy, is in pink. The CPI is year-over-year is in black or grayish, whatever, black maybe. You see how high it is at 6.8. The core CPI excluding food and energy year-over-year is at 1.9. Roughly, or no, 4.9. The goods excluding food and energy is at 1.9. Food is at just about 4.9. And energy is all the way up at 6. So, further supporting their preparation is a normalizing labor market, including a rise in income and falling unemployment claims, according to data released on January 7th. Crypto assets are at the furthest end of the risk curve, tweeted Kruger on Sunday, adding that since they had benefited from the Fed's extraordinarily lax monetary policy, it should suffice to say that they would suffer as an unexpectedly tighter policy shifts money into safer class assets. Bitcoin is now a macro asset that trades as a proxy for liquidity conditions. As liquidity diminishes, macro players now in the fray sell Bitcoin and all of the crypto follows. Well, the good thing is I cover the commodities markets and the physical bullion better than anybody in crypto. The first interest rate hike in March 2022. Also, Vincenzo's Gold Crypto Investing does it as well. The Fed has been buying $80 billion worth of government bonds and $40 billion worth of mortgage-backed securities every month since March 2020. Meanwhile, the U.S. Central Bank has kept its benchmark interest rate near zero, thus making lending to individuals and businesses cheaper. But the collateral damage of a loose monetary policy is higher inflation, while reached 6.8% in November 2021, the highest in almost 4 decades. So now the Fed, which once claimed the rising consumer prices are transitory, which I told you from the beginning, it was horseshit. There was zero chance this was transitory. And the more that Powell kept talking about, the dumber he sounded until eventually he had to stop using the term altogether. Has switched its stance from expecting no rate hikes in 2022 to discussing 3, as we've talked about, 3 rate hikes alongside their balance sheet normalization. It's more dramatic than what we anticipated, and the Fed's pivot to a more hawkish stance has been the surprise, Leo Grohowski, the chief investment officer of BNY Mellon Wealth Management, told CBC, adding, well, if you would have watched the XRP Future Millionaire, this would have been no surprise to you because we've been on top of this. It's amazing that the XRP Future Millionaire can see this and understand this and know this to be true and relay it to my audience, but yet all the experts that claim to know it all still don't have a fucking clue. It's that simple. Most market participants expected higher rates, less accommodative monetary policy, but when you look at the Fed funds implying a 90% chance of a hike in March, on New Year's Eve, that was just 63%. Huh. What a crazy shift now that we're in 2022, because you'll say whatever you want in 2021, that you can do whatever the hell you want. I would say I'm no expert, but I am. But look at that chart just from here. What does that look like to you guys? That does not look good. That looks like a played out. All right. Get this fucking thing out. You guys are probably like, what the hell is he doing? Hold on. I gotta get this fucking out. All right. So, look at this chart. So, when we're looking at this, we've got all the way up here. I should, nah. But we've got up on the left side, right side, we've got, it's all unilaterally created in the same exact symmetry. It's come up to a superior double top up here. And I don't know. This doesn't look good. Doesn't look good. So we've got that. We got the chart. So now collateral damage. All right. So we already seen this. And now we go into the mini bear market. So Mike McGlone, the Cedar commodity strategist at Bloomberg Intelligence, called $40,000 an important support level in the Bitcoin market. Furthermore, he anticipated that the cryptocurrency would eventually come out of its bearish phase as the world becomes digital and treats Bitcoin as collateral. I could see that. It's just if we break 40,000, we're coming down. See the 29,796? That's the accumulation zone. We're probably going to have to come back down there. The statement arrived as Bitcoin's drop from its November 8th record high of 69K is now over 40%. According to Eric Irvin, Chief Executive Officer at Block Force Capital, the drop has primarily washed off recent investors, leaving the market with long-term holders. It could be the beginning of a mini bear market, the executive told Bloomberg, adding that such corrections are completely normal for crypto investors. So Bitcoin performs classic bounce at 40.7K as Bitcoin price comes full circle from January 2021. Kruger also noted that Bitcoin has already dropped too much from its record highs insofar that it now stands technically oversold. So if the CPI reading surprises on the downside, markets could expect the Bitcoin price to pop and trend for a while. Once they will have the U.S. inflation data, Kruger said, adding, think prices should chop around 41 to 44K until then, with an upwards skew given how strong the rejection of the lows have been. So he's just saying if there's a low CPI number, which obviously that would help bring the prices up,